A very good afternoon, good evening, and good morning, everyone. It's wonderful to have you here with us today at the Singapore FinTech Festival 2020. Welcome to today's panel discussion, Future-Proof Your Supply Chain, exploring new access to working capital and expansion funding in the FinTech age. Supply chain finance first came of age after the global financial crisis in 2008, freeing up working capital for companies at times of liquidity stress and extending cash flow terms between customers and suppliers for mutual benefit. Now, amid COVID, consumption patterns have shifted again, abruptly. In a recent poll, Ernst & Young say that 50% of respondents cited operational continuity as the single biggest impact of the pandemic. With respect to supply chain finance, we now face over $5 trillion funding gap globally and around $2.4 trillion gap in APAC alone, and this is widening. Today, we seek to examine the impact of COVID across the supply chain and explore a new breed of funding solutions for SMEs to put financing to work. I'm Pierre Habib, Head of Ecosystem and Growth at AMTD Digital, and I'm delighted to welcome today four impressive individuals with four distinct perspectives. I'm really excited about getting into this conversation. Associate Professor Puay Guan at National University of Singapore, welcome. Arnab Bhattacharya, Head of Financial Services, Zilingo, good to have you aboard.
Hello.
Haiping Choo, CEO and co-founder at One Exchange, welcome.
Good afternoon.
And Iwan Kurniawan, co-founder COO of Modalku.
Hi guys.
Good to have you on board. Well, so Professor, we might kick things off with you. You teach at both the NUS Business School and the School of Continuing and Lifelong Education. You're also author of the book Supply Chain Management: A Concise Guide. What are you seeing at the macro level across supply chain landscape through COVID, and what does this mean for us as consumers?
I think there are a few trends, and I think it kind of relates to what we'll talk about today as well. So supply chain, consists of a few flows, right? As we all know, so product flow, the cash flow, and the information flow, which roughly corresponds to technology as well. So one of the buzzwords that we hear a lot these days is resilience. So companies are looking at how do you make supply chains more resilient, which is how do we prepare for multiple sourcing, how do we diversify our sources, how do we have contingency plans, and that's very much on the physical product flow of the goods, and how do we ensure that supply and goods keep moving, right? And along with that, we are looking at the digitalization and the use of technology in supply chains. So obviously, with a lot of lockdowns in place, people had to work from home. They were not able to access their facilities. They had to do remote monitoring. They had to do remote control of their operations. They had to manage the global operations with the use of remote technologies to actually streamline and of course to use technology to streamline the operations and the process as well in order to reduce costs. So a lot of this digitalization processes or digitalization technologies that were already started in terms of that digitalization trends were accelerated as a result of COVID. And of course, we talk about the use of digital payments. So again, that is very much part of this digitalization trend, where we are talking about how we can actually digitalize finance as a way to streamline our work processes. In some cases, actually to reduce the amount of physical cash handling as well, that we avoid touching physical money, right? So on the B2C side, there was a lot of these digitalization initiatives that was forced as a result of the COVID fear. But at the same time, on the B2B side, that digitalization of payment processes, actually streamlines the workflow, and then of course that leads to other trends like the use of trade finance or use of supply chain finance enabled by technology as a way to help with companies' cash flows.
That's a really good insight. Thanks, Professor. On finance, Arnab, if I can go to you. you came from banking and ended up in a fashion marketplace. That's a pretty interesting pivot. What are the emerging trends that you're seeing in e-commerce in Asia, and how does it link to finance?
Yeah, so I think, just taking up from what Professor mentioned, right? One of the reasons that I actually made the change, because I truly believe that the marketplaces of the future are going to be sort of enabling the operating data sets that financial institutions need to analyze and provide access to credit to SMEs. So if you look at one of the biggest challenges of providing access to credit for SMEs has been the lack of financial data points. So if the last decade has all been about B2C commerce, I do believe that the next 10 years is all going to be about B2B e-commerce. And how do you solve for problems beyond the sort of top 5,000 corporates and supply chain initiatives that has been traditionally what I think the world and financial institutions has focused on over the last sort of couple of decades. So e-commerce is probably going to be a massive trend in the B2B side. It's also interesting that 70% of the processes on the B2B side are typically analog, which also reflects in the kind of formalized financing or unformalized financing that you get at the bottom end of the chain, of the supply chain that you come through. So I think e-commerce data sets, which gives better insights into how organizations are performing their business, not just on historic financials, which at times can be 12 months dated and very difficult to get a sense of what a business looks like today. So real-time data set sharing, analyzing how logistics movements happen, trying to create early warning patterns about how a business is growing or not growing as fast as expected, I think is going to play a massive role in sort of enabling supply chain financing beyond what we see today, which has traditionally been at the, what we call the top tier local corporates in banking terms, or the MNCs. So a definite shift, and COVID, I think, is going to be accelerating that process. We are seeing that happening at Zilingo, where we are fundamentally as a marketplace enabling supply chain solutions, and as my role, providing supply chain financing solutions at Zilingo. And what we expected maybe something to happen in 5-6 years time, courtesy COVID, I think businesses are realizing this whole relationship aspect where they jump across, hop onto a plane, go and meet customers, etc., is now got to be done in a more digitized fashion, whether that's interaction, whether that's solutioning, whether that's payment settlements, all of those aspects. So fundamentally, B2B e-commerce, I think, is here to stay and enable supply chain financing in a way that we haven't seen in the past couple of decades.
Yeah, interesting. And so finance is coming in different forms. Haiping, just maybe if I could just jump over to you. One Exchange is a private market exchange. It's a new way of raising capital. What does this mean for SMEs?
So I think when we look at SMEs today, we know that many of them are heavily impacted by COVID. And many of them do need to raise capital. And as what Prof said, many of them do need to digitalize in order to survive and recreate themselves in the new economy. So when you talk about raising capital, one of the most traditional ways is to do what we call an IPO, or traditional IPO. So of course, there are many benefits to doing an IPO. You raise money, you get fresh funds into the company to execute your business plan, whether it's to strengthen your supply chain or digitalize. On top of the IPO, there are also other benefits where you are actually expanding and also enhancing your shareholder base, which means that people that used to be your customers or your suppliers or your stakeholders can now be your shareholders and now become your advocates. And there are also additional benefits of an IPO, such as improving your visibility and boosting confidence among stakeholders, which may include bank finance. However, despite the many benefits that an IPO brings, many SMEs are still, they're either too early or they're unwilling to go through a full IPO for multiple reasons. One of them is the high cost of an IPO, the heavy compliance requirements, the complex process, and also the need to provide personal guarantee and so on and so forth. So what we do is that at One Exchange, we came up with a new way to sort of reinvent the IPO. So we allow companies to list a portion of the company and have it tradable amongst investors, so that investors can participate and own a share and get liquidity, yet remain private and retain operational flexibility. So we're leveraging the general trends where it's going more digital, people are more comfortable investing. There's an increase in fintech adoption, as Prof also earlier mentioned. At the same time, we are also using new technologies like blockchain in order to reduce the cost for digital IPO and allow this new type of financing for SMEs.
Fascinating, Haiping. We'll get into it in a bit more detail. Thanks for that overview. Maybe just over to you, Iwan. Now, tell us, Modalku is the new breed of SME lender, joined up with funding societies. Tell us a bit about the needs of SMEs in ASEAN and specifically in Indonesia.
Thanks for the question as well, Pierre. So Modalku could be a name that is not that well known in Singapore or in the English-speaking world. So I'll do a quick introduction. I'm the co-founder CEO of Modalku. We are also known as funding societies in Singapore and Malaysia. So we're licensed in these three countries. And over the last 5 years or so, have given out about $1.3 billion of financing to about 50,000+ SMEs, even during COVID-19. Right. So the question was about how, what needs SMEs have. And if you look at SMEs in Indonesia and Southeast Asia, we're talking about 60 million businesses in Indonesia alone, and many more in other parts of Southeast Asia. And the issue is that while there's that many SMEs, many of them are still underserved today. And the reason why they're underserved is because they're still facing difficulty in accessing some kinds of AR and AP solutions, which are typically reserved for larger enterprises with a large collateral base, so that they can provide a collateral for bank financing, or it could be due to the willingness of the owners who are not willing to provide their own personal collateral for financing. It's also due to the fact that while there's so many SMEs out there, many of them still do not have proper financial statements, which are things that banks typically require. And also, if you think about the cost to serve these SMEs and the return to get out of it, that's something that typically the reason why some banks still hesitate to reach out to the smaller SMEs is because the ROI is not as high as compared to if you serve the larger companies on the supply chains, right? So we're seeing also a new generation of SMEs, younger owners, second generation, third generation owners who value convenience, speed, as well as ease of use, as opposed to just the price and the cost, right? So the needs and aspiration of SMEs is that they would like to access a different kind of financing, an easy way of financing to reach their full potential. And that's what Modalku and funding societies offer in Southeast Asia.
Wow, that's a superb insight. 60 million SMEs, is that right? Professor, if I can jump over to you on that one. So I know you speak a lot about the importance of financing to fuel SME growth. In this context, how can we as an ecosystem make finance more readily accessible to these 60 million small business owners in Indonesia and the others across the region?
Well, I think that's one of the issues that I think that companies like Modalku and One Exchange and probably Zilingo to some extent are trying to solve, right, in terms of providing alternative financing modes to all these companies that previously were not able to access the traditional banking or finance system. So I think there's probably no easy answer. There are probably a number of barriers for how they get access to capital traditionally, right? So so we hear a lot about administration costs, for example, of onboarding SMEs, and that's why it's not cost effective for the banks, for example, to in the traditional sense of onboarding customers like these for financing. And that's why you talk about alternative methods of lending or using invoice financing as ways of raising capital for them, right? Or even things like peer-to-peer lending. So the good thing is that because of technology, it's possible to reduce the transaction costs of some of these verifications of some of these approval processes, and to some extent through the use of data, for example, being able to create portfolios and to diversify the risk of different entities coming on board and sort of to limit the risk profiles of these entities even without much information, right? So one of the things that Iwan mentioned just now is we do not have much information about these companies because they may not have a formal credit rating, they may not have collateral or assets in the companies to monetize, right? So how do we control the risk? So these are issues that I think the different tech companies as well as the banks that try to enter into this sector are trying to solve through a combination of probably both technology as well as improve business processes to actually create risk profiles and diversified portfolios of these companies so that they can manage their risk and the bad loans, the percentage of bad loans.
Yeah, so risks, there are, they're across the entire supply chain. Maybe Haiping, if I can just jump over you on the point of capital that Professor just raised. Given all of these macroeconomic shifts mentioned earlier, what are the sort of how is all this changing the shape of the business partner relationships from a supply chain perspective that you're seeing?
Sure. So I think on a macro level, it's a very unique situation. COVID is a black swan event. So on a very macro level, because we run an investment community and they're always trying to keep up with the trends, some of the latest trend is that we are going to see a K-shaped recovery. So the K, starts from here, it goes down. All the industries are, equally affected by all the lockdowns and all that. And it branches into a K because there's a certain subset of industry that will recover faster and there will be a certain industry that will not recover as fast. So if the bottom of the K and if the top of the K. So if industries like retail, F&B, anything that requires a lot of physical interaction, obviously being at the lower of the K, you have the upper part of the K where recovering way faster. And the most common denominator among the upper part of the K is digital. So you have all the fintech platforms, you have all the, literally everybody here, platform marketplace, online marketplaces, we are considered a top part of the K. And a recent survey showed by Google, Bain and Temasek have shown that because of COVID, 1 out of 3 digital consumers are entirely new. They are new because of COVID. And majority of them, according to survey, will remain consuming digitally even after COVID ends. So COVID has resulted in a macro trend where consumers, there are more digital consumers, and they'll remain digital consumers even long after this thing ends. So people are forced to use Zoom today. People are forced to download wallets to pay for things because, as Prof said, they don't want to touch physical money. There's all these habits that has resulted because of COVID, and they'll continue to do so. And I think the common trend is digital, as Prof also alluded just now. Really, the relationship between business partners will have to be more and more digital across the entire supply chain. Having a consensus or a common database, having to digitize the process, having to meet demand and supply. All this will be on a very macro level important things to in order to stay lean and resilient. And all this can only happen if SME and the entire supply chain become more and more digital.
That's interesting. So maybe we can just drill down a little bit in terms of as you're referencing the supply chains and their relationships. Talk a bit about a sector, Arnab, if you could. How is COVID impacting the apparel and footwear industry that Zilingo operates in, and especially with the moving of supply chains around, being more near shore and also looking for lower cost markets in Vietnam? How is all this playing out with in your sector?
I'll take a little bit of word from what Professor said. It's complicated.
Yes.
Right. So it's not a simple solution, because there are different factors at play. Obviously, COVID, it's increased the need for diversification in different forms of manner. So obviously that plays into if people were concentrated in one part in China, then there was a need for diversification at the initial stage of the COVID phase. But now China has recovered pretty fast. But at the same time, people realize that what was a short-term recovery doesn't necessarily future-proof. yourself. So you've got to create a distributed supply chain process where you don't have too many eggs in one basket. You've got to create different baskets right now. So that's a clear trend. Then there's a macroeconomic element, which is again, the US-China trade wars has also created certain issues, certain times access to capital. So that's sort of playing out in different forms of manner. Again, I think Southeast Asia is likely to be a winner in a lot of ways, because the other trend which digitization drives consistently is sort of segmentation. So what was a one-size-fits-all strategy is now getting more and more sort of around customization, which again plays to strengths in smaller countries, because you don't need to have factories which are 5 kilometers long and trying to push out at volumes and scale. You've got to sort of cater to different needs at different price points that are coming through. So I think that's what we are seeing in terms of the market. China still is strong, but the ability to the need for diversification across Southeast Asia and even areas in South Asia is increasing quite rapidly. The other piece that we are seeing is the traditional model of large brands buying from factories is sort of changing, which is being driven by, I think, who are the arbiters of consumer decision making is now becoming more and more the B2C e-commerce platforms. So whether you have a Tokopedia or whether you have an Amazon or any of them. And fundamentally, so the factories that have been traditionally suppliers, they are now saying, can we create our own private label brands and directly sell through e-commerce platforms? That's another shift that's fundamentally taking place.
That's interesting. Thanks, Arnab, for that. Maybe let's looking at Southeast Asia, in particular Indonesia. Iwan, if we can jump over to you, because you cross over various sectors in Indonesia. How are these different sectors being impacted, and specifically, how are the SMEs coping with all this?
I think quite a number of our fellow speakers already shared a bit of their perspectives. Actually, I want to share a little joke that I met one of my clients recently, and a few months back, they were a fashion business. They were selling underwear, manufacturing underwear, and then they switched over from underwear to making masks for quite a while, right? So that is quite a big thing, and they still will continue doing the mask business even going forward. So quite a fascinating change to see, right? So I'm not the full expert on how different industries are doing, but I've talked to a number of clients in our industries, different industries that we serve as well. For sure, the winners, like what Haiping mentioned earlier, technology, even telecom is doing great in most parts. FMCG has been quite resilient, especially if you're referring to essential goods. Healthcare as well, not all great, but then like some parts, like pharmaceutical supply chain has been fantastic. So on the poorer side, we've seen retail, construction, travel and tourism, for sure. But what's for sure is that COVID-19 is overcoming a large inertia in digital adoption. And if anything, one of the toughest challenges that companies like Zilingo and ourselves face in the last few years is that for them to adopt our kind of services, they have to be first aware that they can get better benefits using us, and how to use us is in itself a process. Right, so this overcoming of inertia is quite interesting. So in a way, you either adopt digital ways to take orders, to sell, even to buy goods. Like for example, I'm buying on Zilingo, right, as well as other platforms. If you don't do that, it could be hard for you to even buy goods to sell again, right? And what's interesting also on the financial side, on financial management, it is not a new problem, or it's no secret that cash is the enemy, or cash is king. Cash is king before, but now is the enemy in COVID-19, in that for SMEs who don't manage cash professionally, or in a way, you typically don't have too much cash sitting around because it's expensive to have cash sitting around. How do you manage that, right? So you find that SMEs and even larger companies are finding it harder to pay back their distributors and principals on time, right? So the kind of impact we see moving towards digital, paying back on time, struggling to pay back on time across industries, not just one or two, is becoming more of the issue.
Particularly interesting, you're talking about the companies responding to COVID and its shift in demand, and essentially in some cases pivoting. But I think it's got a question for you on, for the companies that are looking to expand their operational capabilities or capacities, particularly for growth or jumping on new opportunities, what alternative funding sources are there for them, and how can they respond to this sort of quickly to jump on these opportunities?
Sure. So at One Exchange, we do provide an IPO alternative. So what we do is that we want to provide a very cost-effective way, a very streamlined way, where we run a process and allow them to convert their stakeholders into shareholders. So we leverage technology to sort of fractionalize the investment. So we can, reduce the investment. Typically, if you invest in a private company, you may need to cough out, let's say, 1 million or 2 million. We can reduce it to, I think, as little as 1K, as well as leveraging an exchange infrastructure built on blockchain, so that they can then buy and sell. So previously, if you want to involve, or get money from as a private company, your potential investors will need to hold their investment for at least 5, 6, 7 years before IPO and they can sell. For us, we are able to allow your company to remain private, at the same time allow for liquidity and trading to happen as if it was a listed company. So for us, we are trying to provide an alternative funding source that is shareholder driven. So we are allowing the company to issue liquidity in order to use it as a financing source. And the benefit is that once they are able to convert their stakeholders, be it employees, be it customers, be it suppliers, to be shareholders, and then there are shareholder alignment, and everyone's aligned together in order to help the company achieve and maybe get past this COVID phase. Because we are a private exchange, we are also able to create different type of financing structures. So it can be debt, it can be equity, it can be APAR financing. It really depends on the customer need. And so for us, we are using leveraging technology in order to provide these alternative funding sources and underpinning it with an exchange layer, so to make it more accessible to more investors.
I'm going to jump over. This one's for Iwan and Arnab. You guys, in that order, or if you like, you both touched on digitization as being an important part of being part of the new economy. What are some of the pain points that the companies that are on the digital marketplaces are able to solve versus those that are offline? Maybe Arnab, do you want to go first, and then perhaps over to Iwan on that one?
Yeah, so I think Iwan and I have had a few discussions around the same subject, and I think that forms a bedrock of the partnership that we're trying to form as well. So the key element of marketplaces is that you get access to more demand, right? And it comes back to something that I mentioned earlier. Your inability to actually move around is one element that was to your existing customers, and you can serve it with the existing market. But typically, SMEs have always been challenged by the fact of they're restricted for capital, and and capital comes either that's monetary capital or human resource capital. So their ability to get on the marketplace and therefore reach out to more customers increases significantly. So you see a definite increase in demand around the same. The second piece is obviously in terms of sourcing. Again, typically as an SME, it's a relationship driven, or in a particular market that you operate, that where you can source from. And then that limits your ability to really be competitive as you move forward. So again, getting into a scenario that you can source from a larger, broader segment and maybe reduce your cost is critical. So marketplaces effectively, over a period of time, it doesn't happen for all businesses, but businesses who have a thought process around growing their business expansion, because fortunately and unfortunately, there is a mindset aspect as well. some of the SMEs are very comfortable where they are and they just start looking for marginal efficiency, while other people look at it from ability to grow their business or build new business models on top of it, right? Mm-hmm. So I think that's a key element. The other aspect that I think the benefit that comes from businesses operating in marketplaces, just not SMEs, is the whole concept of aggregation, right? You yourself could be doing a turnover of $2 million per annum, but you come onto a platform which does $1 billion per annum, you suddenly get benefits of logistics, shipment costs, etc., which again adds to your operational efficiency, reach aspect. And the other aspect is, I think, the element of data and benchmarking. So you converting your operational data into data sets, which you can then look at it and compare with competition, which then allows you to make better decisions at the front line. So I think these are sort of the three top benefits that you get by operating on marketplaces. And obviously that then allows into financing. And I'll add Iwan to add to that.
Hey, Iwan, I'm going to add a little bit more to the question for you just to make it more interesting.
Pierre.
So, Iwan, then maybe if you could just, I think that was a pretty comprehensive answer, but so tell us about how these alternate lending solutions are different to traditional banking solutions, particularly where SMEs don't have existing relationships. How do you resolve that challenge?
I'll answer this question first. I think it's the main one that you want me to answer anyway. So, in short, how alternative lending compared to bank services is actually really complementary. They're quite different in terms of what is the value proposition to the customer, right? So, for digital lenders like us, the heavy focus is on solving the problem of acceptance. How do I accept an SME who previously is not accepted by traditional financial services, right? In a smart and reasonable way still, right? So that may be a smooth onboarding process that perhaps process of which may have been deterring folks from applying before, as well as how do you also underwrite with limited data around financial statements, let's say, or many SMEs do not have financial statements with no collateral. How do you do that? Right. So, and what's been different for alternative lending is that we're more creative how we use information and data. Right. For example, if you don't have financial statements, fine. We'll accept bank statements. Right. We'll accept digital transaction history. We'll accept SaaS information, SaaS data, or even things like giving you a small limit and then over time you prove that you were able to repay. Right? These are techniques that many alternative lenders deploy, right? And the kind of onboarding process is mainly digital, if possible. In places like Singapore, where data infrastructure is better, we tend to like to pull data from different sources via APIs and different kind of techniques, so that the application is just 2 minutes as opposed to an hour that you may take somewhere else. So while a bank may be for their own good as well, quite strict and very clear in what they need from the borrowers, and that involves collateral, financial statements, some time period of profitability. Often you need to open a bank account if you don't have a bank account there yet, right? Which drives up the document requirements and could be suitable for onboarding larger enterprises, but definitely hard for younger companies or smaller companies who are still newer or find it more difficult.
Thank you. That's fascinating insight. Maybe we'll just sort of zero in a little bit on Singapore, if we may, Professor. Singapore, it's a transport hub, a finance hub, tech hub. What initiatives have been taken here to uplift the capability and strengthen supply chains in the ASEAN region?
I think basically it is something that is ongoing. So there are, initiatives over the years that sort of, incrementally promote Singapore as a business hub in the different areas. So the logistics, air freight, sea freight, financial hubs and the business hub, all these come together in some form, and they mutually complement each other and create synergies among all these different initiatives. If you talk about all recent initiatives, I could, for example, there is a network trade platform that was launched a couple of years ago, and that was actually meant to connect different supply chain players together So the customs and then logistics providers and the financing and insurance people as well into the similar platform to share information and to share documentation and to streamline the workflows. So initiatives like this, as well as probably company initiatives such as PSA would have its own initiatives to try to link up with the shipping lines and with the carriers and with even logistics providers to share information and streamline the document flow. Of course, if you look at the regional initiatives within ASEAN, ASEAN has been looking at various trade green lane initiatives over the years. So they have just announced a recent initiative as well to actually more closely integrate the custom clearance processes between 6 ASEAN countries, so that the cargo can actually flow through these countries more easily rather than by sharing information between customs. So what this actually requires a lot of information sharing, to some extent probably a standardization of different standards, in order to have the transaction being recognized across different governments. Even for company-wise, when we talk about supply chain integration, I think there is a need to have certain standardization of these transaction flows. And when we talk about marketplaces, for example, right, which our speakers are actually operating, we need to be able to integrate all these parties together. So in some cases, when you have different marketplaces, then how do we actually encourage this information sharing between different companies and different platforms? So companies actually come together to form consortiums as well. So if you look at blockchain, that's very much, it could be individually company driven if it's a big company, but in many cases, the consortiums of banks, consortiums of shipping lines, and perhaps even the customs actually come together to sort of work together to share information and ensure that their transactions are being recognized across different parties as well.
It's interesting. You mentioned blockchain. Obviously, the connectivity and integration is critical. Haiping, you're nodding your head. I know you're a user of blockchain in your platform. How are some of these emerging technologies changing or creating new possibilities? Whether it's blockchain or AI, how are you seeing things?
Sure. So I think we all agree that digitalization is the way to go. And with digitalization, obviously, you have more data. And data by itself, obviously, is simple data. But with that, you can actually run analytics, you can run machine learning, you can run AI. So I think people obviously are using various adoption methods. But ultimately, you want to figure out a goal or endpoint, and then you optimize towards that result. So for example, how we are using AI today is that because we operate a marketplace between investors and opportunities, we are also using machine learning to sort of figure out investor behavior. What kind of deals do they like to invest in? How long did they spend on this deal? Have they actually invested? And we're actually optimizing it and showing them the deals which they like to see. So that obviously increases the hit rate. I think once we have digitalization that's a result of COVID, more and more people are having more opportunities to invest in AI or some form of AI. Because AI is also a very wide encompassing technology in order to make their processes more efficient. For blockchain, as Prof alluded, it's also a different use case. So blockchain, for all intents and purposes, is basically a new form of database. It's very secure. It's immutable. Where we are using it is because we want to create a market infrastructure, but we don't want to use the legacy systems where you have multiple parties, they all have their own database, they are counter-checking, they are manually adding, and manually reconciliation. So in order to record one share transaction, there could be 4 or 5 parties, and each of them have their own DB, and it has a lot of effort. So what we do is that instead of all that, we have a blockchain. It's centralized, it's protected, it's immutable, and you need your private key. And once you're able to update the blockchain and use it to effect a share transaction, everyone will see a single database and it becomes a golden source of truth. Ultimately, this reduces costs, and then we can pass on these cost savings onto the SME.
Interesting. Thanks for that, Haiping. Maybe Iwan, if you can just help bring to life all of this in terms of a use case that you'd like to share, or something to sort of help people envisage how this applies in the real world.
Sounds good. And one of our goals, actually our main goal, is to make financing easy. Easy for new to financing to get started, easy for SMEs who are yet to reach their full potential, So towards that goal, the way we have worked with different companies, for example, working with corporate supply chains, the big brands in the region, to work with a long tail of distributors, right? So if these principles work with the banks for the short tail, which 80% of the volume, that 20% comes to us for us to work with them. Because these are the kind of guys that we are much better suited to serve. Also working with digital e-commerce platforms, and it may not be a multi-category player like Zilingo is now, as well as other players, even with reseller platforms, specialist category platforms, all kinds of digital platforms, SaaS companies, supply chain enabler companies, to use their data to onboard their merchants as well as their buyers to help them grow further as well as letting SMEs use our supply chain financing system. May that be car dealers with dealer financing, service companies like advertising agencies or distributors to upload their invoice into our supply chain financing system in exchange for financing. All in all, it's easy onboarding without collateral, no need for financial statements, sometimes even no financial information for us to be able to help them achieve their goals.
Wow, it's some good news for SMEs. Prof, maybe to round things out, it sounds like it's a whole new world of opportunities for SMEs here. How does this change their overall growth path through to capital market access, for example?
I think the thing about SMEs is that we all know that SMEs provide the largest employment opportunities for the people, right? Even though they're small, but collectively there are many of them, and traditionally they have had limited access to capital. So so I will pick up two in a way 2 points, right, from what was said earlier. Arnab talked about segmentation. So we are talking about actually new solutions that target SMEs that previously were not able to access capital, right? And Iwan mentioned about accessing the 20% of companies, right, that traditionally were not able to access. So with all these technology solutions and different kind of capital market solutions, right, whether it's with one exchange or with Modalku, right, solutions like these actually give them multiple sources that perhaps traditionally they were not able to do so. So it's probably good overall, right? Because I think it comes back to the point earlier, do they want to grow, right? So if they don't want to grow, I think Anand mentioned that as well, right? So if they do not want to grow, then actually it is not required to get financing. But if they want to grow, then having all these sources of financing will actually help with their cash flow and allow them to be able to expand their business. And for those companies that actually have those aspirations, this would be a good thing.
And that's good news for the consumer. Well, thank you very much, Professor. Gentlemen, can I invite the audience to reach you on a particular platform that you use? Professor, whilst you're there, you're on LinkedIn, I know. Is that a good place to connect?
Yeah, sure.
Arnab, how about you?
Yeah, absolutely. LinkedIn, email, whatever, easy.
Awesome. Haiping, you what's good for you?
Yes, I normally use my email. Yeah.
Okay. And Iwan?
Yes, LinkedIn is good usually.
Terrific. Well, thank you very much all for joining us today. And it sounds like there's some really encouraging prospects for the SMEs in the region and globally. And look forward to being part of the future with you all. Thank you very much. And thank you, audience, for listening in. And I wish you a very pleasant day, afternoon, and evening. Take care, everyone.